Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the F&O cues. I'll talk about the general trade setup. And the global cues, the US markets were short, so we didn't get any cues from there. But the Asian markets are trading with a negative bias. Nikkei is down 1%, Hong Kong is down 0.5%, and the SGX Nifty has extended the losses. It's trading down by close to 0.5% currently. So the weakness in our market continues. Now the US markets were shut, so we don't have any cues that come in from the ADR market, but crude at this point of time seems to be doing well. As far as Brent is concerned, it's trading at about the $65 barrel per mark, and you can see that the NYMEX is trading about close to the $62 barrel per mark. Over the past few days, there has been a lot of traction that's happening as far as crude is concerned. As far as base metals are concerned, all of them had a weak close except for aluminium, which was trading flat. Copper, zinc, nickel, lead and tin, all of them seeing a downtick as far as their prices are concerned. Now China is shut given the fact they have their local holidays, so we're not getting any kind of cues on commodities from China. But precious metals today seem to be under the weather. So gold, silver, platinum, palladium, all of them are seeing selling pressure in trade today. What are FIIs doing? FIIs were net sellers yesterday. They sold in almost 895 crores in the cash market. DIs were net buyers to the tune of 586 crores. So that's the general trend that we're getting. So on a month-to-month basis, if you're looking at it, FIIs have whatever FIIs have sold, DIs have managed to buy in the cash market. Now, what were the sectors? The small cap and the mid cap saw most of the selling that came in, 1.5% downside for the small cap. It was the Nifty PSU Bank that was in focus yesterday. At one point of time was down almost 5%, managed to close down by 2.5%. The Nifty Bank also trading rather weak. Now, the Nifty was down almost 73 points. What contributed negatively? L&T, Tata Steel, ITC and M&M were the main contributors. But Agam, what are the F&O cues indicating?
Well, we did see some more writing coming along around the 10,400 mark, but I'll come to that. What we've seen in the futures is the unwinding with respect to your open interest, given the fact that we are looking at expiry, and it's the same for the Nifty Bank futures as well, where we did see a decline in open interest. However, weakness did persist in both these major indices. That said, moving on, we do have the India Volatility Index move up by nearly 2% at around 16.7. But when it comes to the put call ratio, nothing much has changed there. It continues to be around the same mark at around 1.06. What we've also seen is rollovers, which are largely on the lower side, at least as of now. But this is also to a certain extent got to do with a lot of uncertainty that we face over the next couple of weeks, because of which rollovers, Nifty rollovers, stand at around 22%. No changes in the F&O band, but what we are also looking at is more writing the 10,400 call, as I had mentioned earlier, given the fact that we saw Nifty move below that mark. In terms of stock futures, I am watching out for Interglobe Aviation, which saw fresh longs across all series. Similarly, we also saw fresh longs building up in something like an IDBI Bank. But on the downside, we did see some weakness in counters such as Sun TV, which did see fresh shorts building up. So it's been a mixed day of trade. But once again, we continue to watch out for whether or not the benchmark indices advance or at least hold their levels as of now.
Stock of the day is Fortis Healthcare. The stock has rallied good 6% yesterday. Well, it was reported that RK Damani Derive Investments has bought in a good 27 lakh shares at a price of 144.5 shares each. In total, the investor has bought in a good 0.5% stake in the company for a sum of around 38 odd crore. And also, if you look at the shareholding pattern to begin with, we are looking at a promoter holding shareholding standing at a good 34%, and the public shareholding at 66%. However, the pledge of the shares have been invoked. Almost 13.26 crore shares which were being pledged have been invoked on Feb 15th and 16th, which comprises of a 26% overall stake for the company. With this, the promoter shareholding of the company has come down from 34% that we saw earlier to 8.8%. Having said that, however, the analyst Bloomberg consensus rating seems to be a pretty picture. Just to give you a background of what it actually is, Delhi High Court has given a nod to Daiichi Sankyo to enforce the arbitrational award to recover a sum of 3,500 crore. This after Singh brothers were accused of siphoning off $78 million from the company, which in turn led to the probe and the brothers stepping down post the verdict. Now there is a serious fraud investigation office committee which has been set up to initiate the probe. The probe will be to check the financial irregularities that has been seen in the financials of the company. Having given all this background, still most of the analysts have a bullish rating on the counter. Pretty much 13 analysts, it's not percent, it's 13 analysts which have suggested a buy rating on the counter, while 2 of them have suggested a hold, and technically there is no sell rating for this counter. In terms of return potential, we're looking at a good 34% return from the current market price as per Bloomberg consensus. With that, let's toss it over for Shraddha for more stock updates.
Well, amongst the stocks that we're tracking in news today includes Apollo Hospitals Enterprise. Now, this is on the back of Times of India report, which says that HDFC officials have held multiple meetings with the Apollo family for a possible acquisition of Apollo Munich Health Insurance. The meetings, of course, are said to be extremely preliminary in nature, and what they're also saying is that the deal under discussion is essentially a bilateral one with no other suitors in the fray, at least currently. So let's see how Apollo Hospital Enterprises reacts to this bit of news. What we're also tracking is Amtech Auto. Now, this again on the back of a ET report which says that US-based hedge fund Deccan Value has emerged as the top bidder for the company. Now, the bids, if accepted, would actually mean that the lenders would have to take a haircut of nearly 65%. Remember, the earlier bids that had come in were below liquidation value. So, and this is good for Amtech Auto. We're also tracking Religare Enterprises in trade on the back of fundraising plans where they will raise an aggregate amount of 916 crores via the issue of warrants. The issue price for the warrants is set at 52.2 per share. So that's Religare Enterprises to track. We're also tracking Vascon Engineering, which has signed a pact with Leena Ashar Foundation to develop a Pune land parcel. That apart, you also have Gayatri Projects, which has announced a reorganization of the energy business that is held by its subsidiary. Now, under the reorganization plan, what will happen is that they will combine and consolidate the thermal and renewable energy businesses which are owned by Semcorp into one single unit to bring about energy. So Gayatri Projects arm will become a minority shareholder with a 6.27% stake in the combined entity, so that we should see some reaction on that name. We're also looking at a couple of bulk deals where New World Fund and you also have a Small World Fund which have sold 1% and 0.5% stakes respectively in Vakrangi, making an exit via bulk deal, whereas you have Martin Curie Global Emerging Market Fund which bought a 0.7% stake in the company. And lastly, we are also tracking Greaves Cotton, which is going to meet a couple of institutional investors including Edelweiss, Kotak Mutual Fund, Green Lantern Capital today. So that is another stock to keep an eye out for.
While the Nirav Modi case is still gaining momentum, the Central Bureau of Investigation has filed a first-hand information report against the pen manufacturer Rotomac and its directors, and also some unnamed bank officials under sections 120, 420, 467, 468, 471 of the Indian Penal Code, which are forgery, concealment of offence and cheating. Now, this complaint was filed by the Bank of Baroda. In this case, CBI says that its officials cheated a consortium of 7 banks by siphoning off the loans, which is to the tune of 2,919 crores, which is only the principal amount. Now, when you add the interest amount, the total amount goes up to 3,695 crores. Now, the consortium of banks which the loans were taken from are Bank of India, Bank of Baroda, Bank of Maharashtra, Indian Overseas Bank, Union Bank of India, Allahabad Bank, Oriental Bank of Commerce. The investigation agency is conducting searches at 3 places in Kanpur and is also currently questioning all 3 directors. The CBI has also sealed the residential premises of these directors and also an office of Rotomac in New Delhi.
All right. In terms of Ambuja Cement, we are expecting a good 17 to 18% growth in top line on top line basis at a number of around 2,584 crore. Net profit is seen up by 43% at a number of 252 crore. Operating performance is expected to be healthy, and we're expecting an 18% growth there at a number of 389 crore. Margins, however, are expected to be flat at 15% as compared to 14.75% in the corresponding quarter of the previous year. In terms of volume growth, we are looking at a 20% growth. we're expecting at a 20% growth at a number of 5.99 MT as compared to 5 MT that we've seen in the corresponding quarter. Also, the market share gains in North is expected to, along with your favorable base, is expected to lead to a good volume growth for the company. However, realization per ton, that number is seen flat at 4,314 due to weak pricing power for most of the cement companies, including Ambuja's. EBITDA per ton also is expected to be flat on account of higher fuel and power cost. Things that we'll keep an eye out for this company, which is the last Nifty 50 company, volume growth recovery and the outlook, cement pricing outlook and the demand that we're seeing in that region, and also the cost curve trend for the entire calendar year 2017, because the company will be reporting the last quarter of the financial year and also the full year financials in this quarter.
If you look at the budget of the Mumbai Corporation, we've made a very conscious effort to put in the budget only those items on which the tenders have already been floated. We've not put anything futuristic, we'll do this and we'll do that. As the Chief Minister mentioned, unless we have land in our custody, we have the permissions in place, we have not put it in the budget. So therefore, these projects that we are starting, or what you see in the budget, or what's being talked of in Magnetic Maharashtra, are projects that will get delivered at the end of the day.
And also, sir, on Coastal Road, like when can we see the project? Like I'm sure the bids have come out as well. So when can we see the work on the Coastal Road beginning? And also there's second phase from Bandra to Warsaw. So when are we expecting? What is the timeline for that as well?
The bids are already out. We are now awaiting the price bids, which should come in the next 1 week. Once the price bids come in, it will take us about a month's time to scrutinize them. And in all probability, we should be able to start the Coastal Road sometime around the end of March.
And how much investment have we gotten for Mumbai in this Magnetic Maharashtra, if you have any idea?
Mumbai's investment comes in to the industries, that the industries department will be able to tell you. But as far as the Mumbai Corporation is concerned, we are looking at fundamentally civic services, for which we fund it through our own balance sheets.
And how much is that, sir?
We have an annual budget of about 27,000 crores every year.
At present, 100% of it is not qualified as affordable. We start at we will start at about 1.5 crore and go up to 4.5 crores. You're absolutely right. There's a big thrust in the budget. It's our Prime Minister's vision, and we obviously want to align with our Prime Minister's vision and take advantage of this market that will get created. And like I feel that opportunity at the middle of the pyramid is what I would consider this affordable housing to be, and it's a huge market and we need to look at that.
So Navi Mumbai Airport project, now that is finally happening. So a lot of people say that there are a lot of real estate opportunities which can come up in that area. So are you also looking at some of these opportunities?
We are certainly looking at Navi Mumbai also, and if there is a good land parcel to be bought, we'll surely do that.
And finally, on the GST front, like there have been clamor about bringing the for the affordable housing, the GST rate has come down, but also the NAREDCO and other bodies are trying to make it across the sector. What is your take on that?
Well, the way it stands, any reduction is always welcome. But I feel the government will prudently take a call between what they need in terms of monies for running the country and what they can give as a swap to the real estate industry. I think that can be best left to the finance minister, because he's capable and he knows, he looks at a much bigger dashboard and understands what market is. As an industry, we would love it, because whatever he has given us in the past, we've always forwarded that to the customer, and we'll continue to do that.
I think the dollar will continue to look weak against many of the emerging market currencies. Of course, there's an argument to say that with rising rates in America, money will be attracted. But on the other side, investors are looking at the growing deficit in the U.S., the heavy expenditures by the Fed, and also reducing emphasis by many national investors for their foreign reserves in U.S. treasuries. And particularly the Chinese have been reducing their exposure to U.S. treasuries. So that would have an impact as well. But I would veer on the side of probably a weaker dollar going forward.
Wow. Okay. Now, drilling it down to emerging markets and then to India as well, and what you're doing, Dr. Mobius. Firstly, the emerging market pack. A lot of chatter in India, at least, and probably in some pockets of the Asian and the emerging markets, that the micro will now start working in a big way. India has, for the better part of the last 2 years, lagged the global markets in terms of GDP growth and earnings growth. We'll probably start seeing that in India and maybe some other emerging markets too. So do you think this micro benefits or the micro working will help attract flows even if the macro were not working completely in our favor, say interest rates, say commodity prices like crude or otherwise?
Definitely. This is particularly true now with the Modi administration trying to encourage investment, not only local investment, but foreign investment. There's an incredible opportunity here in India to invest in infrastructure and many other areas. And the fact that the government is now focusing on encouraging investment will have a big impact. And that goes to the micro level, individual companies, individual industries, individual opportunities.
If earnings come back and come back in a hurry, do you think there is that the principal reason why you, in your last televised interview to Bloomberg, mentioned that you believe that emerging markets as a pack and maybe India individually as well could scale newer highs in calendar year 18?
Yes, I believe that's the case, because we're seeing a lot of positive developments in these major markets like India, even China. You know, a lot of people are concerned about debt in China and the viability of the banking system, etc. This has not turned out to be the case. And we think that, you know, the markets generally will reach new highs. By the way, Russia's now coming back and looking good. Brazil already has come back. So these big emerging markets have performed fairly well. And I think there's a good chance that we can surpass previous highs.
And for somebody who looks at all of these emerging markets, Dr. Mobius, do you think India remains a sweet spot, or is there a lot of competition from the markets that you mentioned and some others for flows to come into the countries?
There's a great opportunity for more flows to come in. As you know, there are many bureaucratic barriers for foreign money to come into India. And I believe the Modi administration is going to begin to address those barriers. And that will encourage a lot more investment. And my belief is that India will outpace China in terms of growth, which means it will be the fastest growing major market in the world. Under that kind of scenario, the interest in investing in India will grow very rapidly. And we're now to a point where the country is beginning to look like it's on the takeoff stage, where it's really getting into a sustained growth and development, which will be very good.
On the big brokerage calls for the day, first we have a CLSA on Varun Beverages. Now the brokerage has maintained its buy rating on the stock with a target price of 885. Now according to the brokerage, the fourth quarter of calendar year 2017 results were ahead of estimates, but it's not a relevant quarter for Varun Beverages as the quarter contributes only 5% to the full year EBITDA of the company. Now however, going forward, investments will drive the growth for the company, and the outlook for 2018 is very strong as the company has secured rights for more territories. Now Varun Beverages control nearly half of Pepsi company's volume in India. Also, the new territories along with the new products will provide opportunity to expand volume and market share growth for the company. Lastly, the recent correction in sugar prices will help the company improve its margins going forward. Second, we have is HSBC on Balkrishna Industries. Now the brokerage has maintained its hold rating on the stock, but have raised the target price to 1,240 from 1,140. Now according to the brokerage, the third quarter of financial year 2018 has demonstrated a strong volume growth, which also has driven the earnings for the company. Now currently the company is operating at a 66% utilization rate with zero net debt. Now going forward, the brokerage is expecting further demand pickup, which will in turn improve the company's return on capital employed. Now the company is enjoying a significant cost and focus advantage in the off-highway tires compared to its peers, which will also help the company generate higher margins. Lastly, the company is expected to gain market share due to its expanding product portfolio, commissioning of efficient and new capacity, as well as because of its focus on high quality products.
What we're seeing this year is a physical build-up of stock. What we see is supply outpacing demand, and that really comes from what we're seeing out of the US. So US supply growth is tipped to get near about 14% growth this year. And demand, as good as it's been with the economic backdrop, is just not going to keep up. And so for us, given that physical surplus, we see downside risk to prices. And even that target that OPEC has set, that 5-year average for OECD stockpiles, we see that lifting despite the deal lasting till the end of the year.
It's interesting that you're talking about this, especially through the lens of U.S. shale, because I've been asking analysts over the past week, when we see those 10 million barrels a day, possibly 11 coming out of the U.S., a lot of folks, most of them have said, you know, OPEC doesn't have anything to worry about that. But looking ahead with 11 million barrels possible, you're saying that this is a concern of yours.
Yeah, it's absolutely a concern, because the way that OPEC has set the deal is that, look, they're not price targeting, they're just trying to get rid of the surplus stock. But at the end of the day, the marginal cost of production is going to matter, and that's going to come out of the US. So if prices get around 65 to 70, you should see a strong incentive for US shale to come online and come online quickly. Let's keep in mind that US shale takes about 6 months to go from rig deployment to production, and that's really the risk here, is that they can respond very quickly.
Right, so in that case, I mean, I guess through these optics of how US shale is, whether OPEC would acknowledge it or not, still basically the swing producer in this market, is it too early for OPEC even to consider what their exit strategy is going to be?
I think right now, in public, it's not going to be something they'll talk about, because the signaling from OPEC is very, very critical, given how much the credibility of this deal rests upon Saudi Arabia, Russia, Iran, where there's a lot of speculation that this may not work. So I think public signaling will be very clear that this deal will last till the end of the year, but they'll absolutely think about some mechanism in which they think, okay, what price is really reasonable, and are we just like leaving market share open for the US shale sector?
Now, you'll find all the live market action right here on Bloomberg Quint Live, but there's lots of news and analysis on the website, bloombergquint.com. Here are some of them. Nirav Modi, in a letter written to the management of Punjab National Bank mid-February, has claimed that he owes less than 5,000 crore rupees to the bank. In the letter, he states that the bank's overzealousness has shut the door on his ability to clear his dues. Finance Ministry has asked the Reserve Bank of India to explain the lapses that led to the over 11,000 crore rupee fraud at Punjab National Bank. It has also sought the regulator's advice on what steps will have to be taken to ensure that such frauds are prevented in the future. Well, that's all we have for you on All You Need to Know, but up next is Indian Open, and that will take you through market opening. Thanks for watching. This is Bloomberg Quint.